Ladies and gentlemen, Mr. Amitabh Chaudhry needs no introduction. A dynamic personality, somebody who's worked across the country's expanse, somebody who's transformed the banking sector in India, even before his present stint at the Axis Bank, which is country's one of the leading private sector banks. I welcome Mr. Chaudhry to the event. Thank you for taking our time. Lots of banking action happening. Before we come to the banking side, in your transformation of the banking sector over the last several decades, you've ensured to set a footprint of banks across country's expanse from Kashmir to Kanyakumari. While the same is happening with Axis Bank, how do you look at financial inclusion, which is a dream of the Prime Minister, which is something has been spoken time and again? Mr. Chaudhry, tier 2 cities, smaller towns, having people that independence, financial independence, what are the sort of efforts that you're putting in at Axis Bank?
So firstly, thanks a lot for inviting me on this platform. Really appreciate it. As far as the rural parts of India are concerned, you will understand and appreciate that even our regulator has a condition that if you set up new branches, 25% have to be in the unbanked location. So firstly, there are rules, and there are rules around, priority sector lending and so on and so forth. So firstly, the government and the regulator are trying to ensure that the financial services industry does not leave that part of the country untouched. All of us are required to, within the regulatory framework, to go and continue to invest in those parts of the market. Over the last 5 to 8 years, it is no longer an obligation. I think all of us have increasingly realized that there is a huge opportunity in some of those markets. Just to give you some statistics, the wealth in India, defined as people with, let's say, wealth of over 2 crores and above, is expected to grow 5-fold by 2032. The expectation is that a large part of that wealth will be created in the rural markets. And I'm not saying that the banks want to go and tap into the wealthy. When any part of the country or any market starts growing in terms of the size of the economy, the opportunities, the schemes which the government might have launched there, the overall wealth, overall requirement for banking services grows up manyfold. And all of us realize that that's a huge opportunity rather than an obligation. So all of us are going and spending a lot of time in some of those markets. Because you asked about Axis Bank, a couple of years back we actually went and publicly announced to the market that one of the important areas which we want to build as a bank is an area of distinctiveness. We want to be known in the market for being different than the others, is what we call Bharat Banking. And for us, Bharat Banking is going and attacking the rural, urban, and the rural and the semi-urban markets. So we have actually gone and made a public announcement and put our kind of neck on the line that that's an area we will invest in heavily. And when we said that this is an area of distinctiveness, we have said we will make disproportionate investments in those areas. So I see, as India's economy grows, as the government schemes which are being implemented across length and breadth of India, you talked about in some of these areas where financial inclusion is a necessity, the framework which we have, the opportunity all of us see, how the wealth will grow, how the infrastructure is spreading in all parts of the country. So India is connected more than ever before, digitization, all that good stuff we talked about, and we heard the two speakers before me just talk about that. It's a big opportunity. So why should we see it as an obligation? We should see it as an opportunity. And I think the more you see it as an opportunity, the more you ask the question differently. What can we do more here? Rather than how do I get away with minimum amount of investment? When the question changes, I think the answer changes. And when the answer changes, opportunities come your way in more ways than one. We are tapping into the farmers, we are tapping into the ecosystems, we are creating ecosystems with partners of all kinds, and we are seeing huge opportunities which we did not even imagine, because earlier we were not even there in those markets. So I would encourage everyone to see this as the next opportunity of the future. We have announced it, we have put our neck out, I hope others do too.
All the best, Mr. Chaudhry. The hall is packed with a lot of youngsters. I see a lot of youngsters. You're a veteran, you've been in the industry for long. Mr. Chaudhry, do you see the fintechs who are into the lending space? Do you see them as a threat? Do you talk to them? do they call you for like a pep talk? Mr. Chaudhry, how are you doing? What's up? You're a veteran. You're sitting in that chair after putting years in the banking sector. So how do you look at that fintech, that fintech knocking at the door, going back, tech savvy? How do you really look at that development?
See, if you go and talk to the CEOs of fintechs, they will tell you they will eat you for lunch. They don't need pep talk from me. We need it from them. So let's just understand this, that they're not looking to people like us,
Sir,
so-called old people.
Guru Gyan, still.
It's okay. So, but yes, they have star in their eyes. They have the capital to back it up. It has come down a little bit after the euphoria earlier, but they still have a lot of capital to back them up. They believe they can change the world. They believe that the financial services industry is worth changing. We are all old dinosaurs who can be taken out. But slowly, gradually, I think the reality is dawning, and the reality is as follows. All of us in the financial services industry realize that we have to become more like fintechs. Not fintech, but more like fintechs. We have to invest more in technology, analytics. We have to understand our customers better. We have to create the right customer journeys. We have to ensure that we give experience to our customers which is as good as fintechs. Which means the huge amount of investment in technology and huge amount of change in the underlying architecture to be able to support that front end of your technology. On the fintech side also they need to change. Earlier they thought they could change everything. They very quickly realized that, oh, by the way, the regulator is very clear that if you want to touch the financial services industry, either you are inside the room and follow all the rules and regulations of the room, or you are outside the room, where then you can't come and play and act as if I can play, with the what is allowed inside the room. Then you're outside. So over a period of time, a lot of fintechs have said that we don't want to be regulated and would like and prefer to stay outside. And as they have made that call, obviously people inside, players like us, are doing the following. We are in many cases obviously changing our platforms, our way of working to ensure we can compete with the people outside. We are getting into partnerships with them. So there are deep partnerships which now exist, and I would say Axis Bank is at the forefront of this. So you take any big name, whichever name which claims that I am in touch, or 15 to 50 crore Indians are transacting with me. They are working with us because together we can offer products to their customers and our customers, which maybe on a standalone basis we can't. And in many cases we are going and making investments in some of these fintechs. So it's a model where you are embracing every possible stream to ensure that you can reach the maximum amount of customers in the best possible manner at the lowest cost and give an experience to them which makes sense. So as far as fintechs are concerned, more are welcome. It will keep us honest. They will keep pushing us. And at the same time, it will also ensure that the fintechs, because we are also giving them competition, also behave in a certain way rather than just going gangbusters and sometimes doing stupid things. See, it is very easy to go and sell a loan. A loan is the easiest thing to give. Someone is willing to give you money, you will take the money. Issue is, how do you ensure that the customer pays on time? How do you ensure you collect the money? How do you ensure that customer understood upfront what the charges would be? How did you ensure that the customer conduct was proper? Now, a lot of these CEOs have seen compliance as a bug. They have not seen compliance as a problem or a part of the product. Now, slowly, gradually, that is changing. And the regulator is ensuring that they understand that. So I think it's an evolving ecosystem. And in that evolution, all of us have a very important role to play. And as long as we understand it and embrace each other's strengths, I think we can take India to a different level, and we can take what we offer to the customer to a different level. That is most important.
I know this is a bit digging deep, but a couple of such CEOs, fintech CEOs, you're having the lunch with. Can you name a couple of them? Or you may have lunch with. Are there any prospective handshakes with fintech companies?
Oh, we are shaking hands with them in a partnership all the time. I mean, today, I don't want to be standing on a platform like this and taking names, but if you take, as I said, any large fintech worth its name, in 6 months, I guarantee you they will be working with Axis in a very, very deep relationship. Why? Because we have created a technology platform where they can combine with us and work with us. It's very easy to say, I want to be a partnership with X. But you need the APIs, you need the technology platform to be able to integrate with each other seamlessly. We have that. They see us as a partner who has a track record of working with other fintechs, and those fintechs are saying very good things about us. So they realize, oh God, these guys are already working with them and they know how to make it work. They understand us. So as you put these things in place, you start getting, now we are getting fintechs coming to us and saying that I have a incumbent bank, but actually I want to work with you because you understand me better. So you are seeing that. As luck would have it, just today evening, we do something called Startup Social in Axis Bank. And today we have one such event in Mumbai where there will be 150 startups who will be present in a function where the top management team of Axis is also there. This is our platform to ensure that we understand what the fintech wants, understand how the partnership can become bigger, and they also appreciate where we are coming from and get to meet all the top people of Axis Bank and Axis Group. So, by the way, we have done these events in Delhi, Bombay, Bangalore, Hyderabad. So, we are doing it regularly and collaborating with them to ensure that these partnerships can become more meaningful.
Mr. Chaudhry, now that you've completed the acquisition of Citibank's consumer business, how do you look at leveraging the vast distribution network? I know it's been a long ride. How do you plan to take it ahead, sir?
So well said. He had only 21 branches, but they have been in the country for 120 years as a retail bank. Imagine a franchise which has been created over 120 years, and that's why when we announced the acquisition, we said it's a deal of a lifetime. Because a franchise which has been created so successfully over such a long period of time has great set of customers, great set of policies, processes which have evolved over a period of time. And we said that we are acquiring this business for 5 or 6 reasons. One, obviously franchise has been around for a long period of time. They have a great credit card franchise. We were seen most as a mass affluent player. They were an affluent player. The complementarity was very, very high. They had a great deposit franchise, so we got deposits in, and today, you know, with the growth in deposits, all deposits are welcome. Third, they have been known in the market for their service. They had an in-house call center, which again have evolved over a long period of time, and the customers swear by them for the service. So we are now extending it to other parts of Axis, and we are tripling the strength of in-house call center people who can serve customers of Axis and erstwhile Citi. We got great talent pool, a pretty profitable franchise. We got it at a price where we believe we did not pay too much for it. And the best part is we took it over on March 1st. 97% of the people joined us. Customer retention has been extremely high. We recently had an analyst day where we shared the data and showed that as per our models, every business which we took over is operating anywhere between 100 to 130% of what we had put in our models. So in that sense, the acquisition has gone extremely well. There is a big date coming up where we shift from Citi systems to Axis systems, but we've been working on it for a long period of time and we've been able to execute it. So I'm quite happy and proud of the fact that Indian franchise has gone and taken over a 120-year-old franchise. Good for India.
On a wintry day in Delhi, cut to Bombay. So a lot of non-banking financial companies are set for a credit squeeze, Mr. Chaudhry. The November 16 decision of the Reserve Bank of India with regard to the unsecured lending, where they decided that they would increase the risk weight for the unsecured. How much of that is a concern, the unsecured lending, and how do you look at that decision at its appropriateness from the RBI?
So again, just putting some reference to context here, the retail loans in India over the last 2 years have grown at the rate of about 25% in comparison to the overall advances growth rate, which has been almost 13.2%. So the rate of growth has been quite high. And in that, the rate of growth of unsecured loans has been even faster. When RBI steps back and looks at all the data which is coming their way, and they do look at data very, very extensively, what they are seeing is that in loans below 50,000, the NPL rates are quite high. They are seeing that the fintechs, wherever they are involved in giving out loans, the NPLs are quite high. The pace of growth on the unsecured side has been quite high. And they want to proactively take measures to ensure that it does not become a problem in the system if the cycle was to turn. And they're also seeing this interconnectedness in the sense that the banks lending to NBFCs has gone up substantially, and NBFCs in turn are also expanding their retail franchise very, very rapidly. So it's not only directly, but indirectly also the exposure is quite high. So in that sense, RBI is just a little bit worried about the exuberance. is worried about the fact that the unsecured, the first signs of NPLs are visible, is worried that the fintechs are maybe overdoing it, and it is also worried about the leverage of some of the borrowers and they're not understanding and appreciating what's going on. So I think they have taken a proactive measure. They're giving a signal to the market, slow down. They're giving a signal to the market that we are going to be very watchful. I don't think RBI is saying this is the only measure they will take. They might take further measures if they are not satisfied with some tempering which they expect as a result of this particular measure they have taken. I think we have an extremely knowledgeable, smart, on-the-ball regulator, and we should expect that to continue. So in my view, it's the right step. If you were hearing RBI and the governor consistently, and really hearing them, this is not a surprise. I think we get surprised because maybe we don't hear what they're saying. Now they are saying, exuberance, please watch, don't grow that much. Now if you don't hear it, RBI will again come down heavily on the people involved. So we should expect that. But I think it's the right step. We want an extremely healthy financial services sector. We have come out of a crisis. RBI, rightly so, does not want it to be repeated in any form or shape, not even close to it. So it's the right thing to do.
I'm sure Mr. Saktikanta Das has been hearing a lot of praise, and rightly so. The recognition the Reserve Bank has been getting at different platforms is come at the right time. I would want to pan your focus on the geopolitical scenario, especially after what we saw between Israel and Hamas, which became a matter of concern. Having said that, the banking space did show resilience, and the banking space did put up a good show, rather stellar show, a lot of banks in the second quarter. Mr. Chaudhry, how do you look at that growth momentum to continue, and what is the sort of expectation that you have from the rest of the financial year before you go for your annual holiday, Christmas and New Year's?
So, global macro is quite volatile, and we have to accept the fact that it is not going to change. Today, obviously, what we see, but there's so many flashpoints. Russia, Ukraine, you talk about Israel, Hamas, what China is up to. You keep hearing about what is happening in some African states. It's endless, right? So in that sense, when some of these flashpoints do occur unexpectedly, it does have an impact on India because we're not living in an island. We are connected to the rest of the world, and whatever happens in other parts of the world does have an impact in India. Even if you go and look at the stories and the speculation that has been there around Fed funds rate over the last 2 years, I think you can write a book on how many times people have got it wrong. So we today, for example, the stock market is also doing well. Market expects 4 Fed fund rate cuts in the next 12 to 18 months. Fed funds is not indicating that. So market is getting ahead of the federal bank here and saying, no, you don't know, we are telling you that there will be more you will cut rates more often than you think you will. So with that kind of uncertainty, it is obviously India stands, while it is not an island, it also stands out as an island in terms of the GDP, the growth it is delivering. The second quarter delivered a surprise to us on the upside, led by manufacturing, government collections, government expenditure, and again the minister and all were talking about it. I would expect, and everyone by the way has revised the GDP estimates for India, revised them upwards. So India is doing quite well. India perhaps is sitting at the best time in its history that if it can execute well, and under the present government they've done a very good job. If we can continue to deliver the way we have delivered in the past, we have a long runway ahead and a very rosy runway ahead, as long as we can get the execution right. Now if you have to look at the history of the last 7-8 years, our execution track record has only gone better and better. So if we can continue that, I'm very, very hopeful about India and what India can be. That's why all our hotels are full. Everyone sees India as a great market. And we sitting in India as a bank, obviously are hoping to capitalize on this opportunity. And we will support as much as we can every opportunity which an Indian or Indian company wants to execute on, as long as it makes sense. So I'm very hopeful. But yes, macro is volatile, so we have to operate our companies being fully aware that unexpected events could happen, and you should have enough cushion to be able to manage a crisis. It will also come your way.
I can't stop myself asking you about the NIMs. Banks have been doing pretty well with the NIMs and the asset quality. Mr. Chaudhry, do you think going ahead, banks would be able to sustain that momentum with regard to NIMs and asset quality?
Well, as a bank, we have to deliver on 6-7 factors, and all of them not necessarily move in the same direction. We have to deliver on growth, we have to deliver on NIMs, we have to deliver on NII, which is related to growth. We have to deliver on fees, we have to deliver on our credit costs and our overall expenses, and finally profitability. And people talk about ROA, ROE, depending on who you talk to. And if you want to increase your NIMs and you become, brazen about it, it will come and impact your credit costs. So everything has to be done in a balance. It has to all exist in an equilibrium. We have seen NIMs have expanded post the rate hikes, which have happened about 250 basis points. We expect the rates to remain where they are, but the repricing of deposits, there is still some tail left, so NIMs are under squeeze. As rates remain where they are, I think the NIMs will stabilize, but some stage in the future, if Fed starts cutting rates, I think India will also move in that direction. And again, there the loans will reprice faster than deposits, so your NIMs will get squeezed. I mean, that's a fact. But overall, I think every bank is quite clear in terms of they need to maintain their NIMs, to maintain their market standing, the market capitalization, and what the shareholders expect. So all of us are working on various levers to ensure that we can keep the NIMs where they are or in the same zone, keeping this equilibrium into account. It can't be one at the cost of the other. So that's what I guess we are hired for and paid for, and we are working very hard to ensure that we stay there, but it is a journey. I see this change which RBI has brought about in terms of higher risk weights. It is like, it will lead to some higher pricing, because the ROEs of banks will go down, because they're putting more risk weight for the same lending. So my view is that this also just shows volatility and uncertainty. It just means that we just have to be on our toes and keep watching all the variables to ensure NIMs remain in the same zone. So I would expect quarter on quarter NIMs to shift around, but I think some of the larger banks will be able to maintain the NIMs in the same zone. I'm already telling you repricing is happening, so they're going down, then they might stabilize. When rate cuts happen, again the NIMs could go down, but then again come back to the original levels.
Mr. Chaudhry, in the early days of journalism, especially business reporting, we had these two iconic figures to look at, Mr. Deepak Parekh, Mr. Chaudhry. You've seen the highs and lows of the Indian banking sector. There's a lot of effort that goes into having an institution built and ensuring that the institution delivers time and again, and the consistency is maintained. In the journey of your banking sector, how do you see yourself personally going forward over the next, say, 5 years, Mission 2030, on a personal level, as a banker, as somebody who's keen to take the mission of financial inclusion ahead, who's also keen on handshakes with the technology companies? A holistic, if you could just sum it up, how do you see yourself?
So let me clarify, I'm nowhere close to Mr. Parekh's and a lot of other people like him, like Mr. Kotak and the world. I'm very, very small in comparison to them.
That's
just happened
really
to be sitting here, that's okay. See, all of us as CEOs serve at the mercy of the boards and our regulator. Let's be very clear about that. And we are around as long as they want us around. In the time that they give to us, I think it is very, very important for all of us to ensure that we create a sustainable franchise. At least when I joined the bank, we launched something called the GPS strategy, and S stood for sustainability. How do we create an institution which can survive us for a long, long period of time? So what are you putting in place in terms of processes, people, leadership, culture, technology, conservatism, what you will do, what you will not do, all of that, the combination of all of that is very, very important. Because we serve for a certain time period, we can always get caught in this game that I'm here only for that long, let me just focus on that. But that never leaves a legacy. What leaves a legacy is that you create an institution which lasts much, much longer. So I think all of us are very focused on how do we create this sustainable franchise. We take all the decisions for the long term. We always have logs in the fire which are addressing the immediate future. the medium-term future, and definitely the long-term future. For example, Axis Bank has taken on itself a mantle to get our NPS score to 80. 80 is a global standard. It's an 8 to 10 year project. If I had a 3-year view or a 5-year view of what I need to do in Axis Bank, why would I ever take a project like this which will not give any return for a long period of time? But the reason you do it is because you're not there for yourself. You are there to ensure that the franchise, the bank, does very, very well. Because we serve the bank. So I think as long as that principle and thought process is clear, I think the decision making is clear, and what comes about as some of the things you need to do are also very clear. So in my mind, when I joined the bank, I remember I did an interview and they asked me, so what are your plans? I said, well, I've not joined the bank to remain a number 3 or a number 4. I've joined the bank to take it to the next level. That journey is still on. We're not reached there as yet. And we'll keep striving to get the bank to the next level till it is done. And I'm very confident we'll get it done. Because the journey we have made over the last 5 years definitely gives us a platform to go and beat some of the people who are ahead of us.
Mr. Chaudhry, it was wonderful hearing from you, your remarkable journey, the sort of change that you brought to Indian banking system, your association with some of the top brands, and your vision to actually ensure that financial inclusion vis-a-vis the technology, the new age technology, they go hand in hand. This is some vision. This is the much required vision that we, in our country, the banking sector, which contributes majorly to Indian economy, we all need. It was a pleasure speaking to you, sir.
Thank you so much. Same here.
Thank you for joining us. Thank you for taking our time. Thank you so much. Ladies and gentlemen, please put your hands together for Mr. Amitabh Chaudhry for being here, sharing with us with a lot of insight. Thank you so much.
From satellites to semiconductors, India is on an economic growth highway. Join us at the India Economic Summit, Sustaining the Dream Run, on 5th December in New Delhi.
I believe that if we work well, we work together, and even media organizations like ours can play a small part in this. I believe that by 2030, we should be established as one of the economic superpowers in the world.
All set to become a developed nation by 2047. The Indian growth story is an unparalleled success. Be there at the India Economic Summit, Sustaining the Dream Run, coming up on 5th December in New Delhi. With over 100 unicorns and more waiting to come up, it's time to celebrate India's entrepreneurial spirit. Join us at the India Economic Summit, Sustaining the Dream Run, on 5th December in New Delhi to celebrate this and more. All set to become a developed nation by 2047. The Indian growth story is an unparalleled success. Be there at the India Economic Summit, Sustaining the Dream Run, coming up on 5th December in New Delhi. From satellites to semiconductors, India is on an economic growth highway. Join us at the India Economic Summit, Sustaining the Dream Run, on 5th December in New Delhi. With over 100 unicorns and more waiting to come up, it's time to celebrate India's entrepreneurial spirit. Join us at the India Economic Summit Sustaining the Dream Run on 5th December in New Delhi to celebrate this and more.
I believe that if we work well, we work together, and even media organizations like ours can play a small part in this. I believe that by 2030, we should be established as one of the economic superpowers in the world.